Hello, and welcome back to the Daily Stack. This is Rob Wallace, your host for the next hour of Bitcoin News Weekly. We break down the biggest headlines in all of Bitcoin, and believe me, a lot of stuff is going on. We got AI picking Bitcoin, we got mining Bitcoin in space, and we got Bitcoin as the ultimate safe haven asset that you need to get out of Dodge. We got a great guest today, Hector Alvaro, but before we bring him up, we got to break it down with the intro. So for years, Dubai marketed itself as the ultimate safe haven for global wealth. This week, the war in the Middle East showed how fragile that promise can be. The UAE is now one of the world's fastest growing hubs for booked financial assets. $700 billion from overseas investors was held there in 2024, and Dubai alone is home to family offices controlling more than $1.2 trillion worth of wealth. But when conflict hits a region, wealth suddenly becomes much harder to move. Let's break down these numbers. So now people are spending over $300,000 just to book a private jet home from Oman. Gold traders in Dubai are offering bullion at steep discounts because shipments are stranded and flights are disrupted. Real estate worth tens of hundreds of millions of dollars is permanently stuck exactly where it was built, now trading at a 25% discount. And when the conflict first broke out, both the Abu Dhabi Securities Exchange and the Dubai financial market issued emergency 2-day closures. When the only priority becomes leaving, these assets cannot move with you. But Bitcoin is different. It trades 24 hours a day, every day, across major exchanges around the world. There is no vault to open, no shipment to ensure, and no border checkpoint that can stop it. Your entire net worth can move across the planet in minutes. 12 words stored in your head. We're also seeing this dynamic play out on chain. As strikes began inside Iran, blockchain analytics firms recorded a 700% spike in crypto withdrawals from domestic exchanges as people rushed to move their funds to self-custody. When banking rails shut down, Bitcoin keeps working. And in moments like this, the real question isn't whether Bitcoin goes up during a crisis, it's whether it's functioning. And this week in the Middle East, once again, it did. All right, today I'm very happy to be joined by my good friend, Hector.
Hey, Rob, good to see you again.
Good to see you. Yes, this is your second appearance on Bitcoin News Weekly. I think you might be the only one who has multiple appearances. So kudos to you.
All right, I'm in the lead.
You're in the lead. Yes.
Top the race.
Nice. So people who maybe did not check in on the last time, why don't you reintroduce yourself to the audience and tell them your Bitcoin story?
Yeah, thanks. So I'm Hector Alvaro, COO at Rhino Bitcoin. We are a Bitcoin-only exchange based in the U.S. And as far as my Bitcoin story, got involved about 10 years ago or so, and learning little by little and dipping a toe in little by little. And as I learned more, I just got more and more enamored and passionate about the value that Bitcoin offers every person on earth. And just as most of us just immediately wanted to tell everybody about it and find a way to work in the space and find a way to make whatever contribution I could to educate and to empower individuals around the world so that they have better money in order to build their futures with. And that's what I've been doing ever since.
Yes. So, I mean, you have an education background and now you've brought that to Bitcoin. You write articles, you make videos. You're making videos once a week now. Love to see it. You just put one out about Iran and people moving to self-custody in times of conflict. So I think that's a great point to jump right in. Let's see what kind of headlines we are talking about today. Of course, we break down the newsletter. Bitcoin News Weekly comes out every single Monday morning, 7 a.m. Eastern, hits your inbox with all the biggest headlines in Bitcoin. And then I bring on great guests like Hector to talk about it, get their point of view, and see what the people in Bitcoin are thinking about what's going on in the world. So the title of today's newsletter is When the World Breaks, Bitcoin is the Wealth You Can Escape With. Millionaires fleeing Middle East hubs like Dubai are discovering that Bitcoin, and not gold or real estate, is the only wealth that can truly take with them. So on your piece, real quick, Hector, you talked about Iran. What did you find when you were researching the video you just made this last week?
Yeah, well, you alluded to it in your intro that, the analytics show that there was a massive, orders of magnitude increase in withdrawals to self-custody once the once the conflict began. And this is emblematic of what we've seen happen in other situations around the world. And for Western countries, I even now I still think that there is this sense of the sovereignty that Bitcoin gives you, the ability to move with your money without needing anybody else's permission, is sort of somebody else's concern. It's this feature about Bitcoin that's like, yeah, but we don't need that here, right? So when it happened in Lebanon years ago, whatever, when it happened in Gaza in the last couple of years, whatever, and even to a certain extent when it happens in Iran. But now we're seeing the same thing happen in Dubai. And Dubai is a place that people don't think of in that same breath as some of these other places. And I hope that this starts to serve as a wake up call for everyone that, if you don't hold your money, you don't own your money. If you need to ask somebody else's permission to use your money or move your money, it's not your money. And I think that part of Bitcoin's value proposition over the course of time is going to continue to reveal itself as one of the most valuable elements, and not just this throwaway, secondary benefit.
Yeah.
So, not that I love what's happening, because I don't love what's happening in any of these places, but it does underscore something about Bitcoin that people, I believe, are going to increasingly find more and more important.
Yeah, I think Bitcoin really shines when it is needed most, when it's just a number go up tool. It's fun, it's nice to have, of course, but when you are in a conflict zone and you need to move and you need to carry that wealth, how many people were able to get out of, say, Ukraine with their money because of Bitcoin, And as you said, again, Lebanon, Gaza, there's so many places around the world, these conflicts keep popping up and they seem to be growing in number. And so the use case of Bitcoin as a vehicle to be able to vote with your feet, move, and take your wealth with you, it really stands out in times like this. And of course, in Dubai, there's a lot of people with Bitcoin. There's a lot of crypto heads that moved out there for the tax treatment. And now they are in quite the pickle. And it'll be interesting to see if Dubai regains its status as this crypto hub, this financial hub in the years ahead after this.
Yeah, even when you take it outside of like a nation state level, oh, everybody has to, do something right away. Even in smaller situations, it's just as important. What about, the female web developers in Afghanistan who have used it to escape because they couldn't get a bank account without their husband's permission? What about the Canadian truckers who, needed support for their particular protest and they couldn't get those funds, other than through Bitcoin? So it's not just about these big, macro front page headline type of situations. It's all these situations where it's like, hey, if you feel like you need to make a change in your life that involves physically moving your wealth, you have to have the autonomy and the sovereignty to do that. And only Bitcoin is going to give you that. Like I said, yes, number go up is great. But in situations like this, when it's life or death, it's not about number go up. It's about number not going to zero. Because if you can't take your wealth with you, it doesn't matter how much it's worth. It's, allegedly worth on paper, because it's not yours anymore.
Well, there you go. Couldn't have said it better myself. Let's jump into some adoption headlines. These are nice feel-good stories, always at the top of the newsletter. To start it all off, we've got Bitwise. They've donated $233,000 this last year in 2025 to support Bitcoin open source developers through Brink, OpenSats, and the HRF Bitcoin Development Fund, fulfilling its pledge to contribute 10% of gross profits from its BitB ETF. So this is a pretty cool initiative that Bitwise has. Was actually just interviewing Matt Hogan of Bitwise this last week, and he was saying, why do people pick Bitwise over others like BlackRock? Well, it's because they are Bitcoin native, crypto native, and they do initiatives like this. They made a promise from the very beginning when they launched their ETF to donate 10% of gross profits each year to Bitcoin developers. And they made it very clear from the beginning that they did not want to feel as if they had their hands in we're messing around with things, right? So they give it blind to Brink, OpenSats, and HRF, and then these organizations can donate it as they see fit. And yet they want to be very clear that, yes, they are not here to change the development process. They don't want to have a say in how Bitcoin is developed, but they want to make sure that these efforts can continue and go forward, and Bitcoin as a protocol can continue to be maintained and improved over time. So very cool initiative. I don't think any other Bitcoin ETF is doing this. And to see a number like that, 233,000, I mean, that can pay for a couple of Bitcoin devs for a year to continue on with their work. What's your thoughts on this, Hector?
Look, it's a great initiative. Matt's a great follow, by the way. His work is excellent. What Bitwise has done is great. I really like not just the fact that they're making the contributions and wanting to do them, very sort of agnostically. They were really smart, I thought, in also distributing or decentralizing who's getting those contributions, so that if you just donate it to one organization, well, maybe there's some risk of that organization having a particular bent or preference. So by distributing those contributions, I think that they sort of mitigate that potential risk. Now, all the organizations that they have donated to are top notch, top tier. OpenSats, Brink, the HRF, they're fantastic. So I think it's a great initiative. I would love to see more ETFs, more companies in the space doing these kinds of things, because all of us benefit from the terrific work that these devs do, and we need to make sure that they continue to be supported.
100%. And they're also the only ETF with proof of reserves, right? A lot of people have been calling for that over the last year plus for Saylor to issue proof of reserves. But it's funny. I mean, very few people in terms of these institutions have followed suit, but they have, I think, proven the case that, hey, no harm has been caused to their ETF because they are showing how much Bitcoin they have held. And so hopefully it catches on and that more of these follow their forward movement with supporting devs, proof of reserves, and helping out the community. So good looks on you.
Over time, this is going to become, I believe, the standard. And as sort of industry leaders, we should be pushing that standard forward.
100%. Other industry leaders, we've got Bitcoin Policy Institute. They did a study of 36 frontier AI models across 9,000 conversations and found that 48% of these AI models preferred Bitcoin for economic activity, with Anthropic models the highest at 68% and OpenAI the lowest at 25.9%. Interesting numbers there, right? Funny enough, because Anthropic doesn't have their own altcoin, but Mr. Sam Altman does, right? He's got eyeball coin, world coin.
Just scan your eyeballs. Trust me.
Scan your eyeballs. Give me your biometric data. Give me your soul, and I'll give you some coins I printed out of thin air, right? So yeah, very cool work here by the Bitcoin Policy Institute. They've been pushing hard, making sure that self-custody and other protections for Bitcoin holders are included in acts like the Clarity Act that will hopefully get passed within the next couple of weeks here. But well, you see this nice 48.3% of AI agents choose Bitcoin. And 91%, of course, use digitally native money over fiat. None of them wanted fiat. None of these AIs were willing to say that. And you can find the full study here. So they put out a lot of great research, a lot of great work. It's a beautiful website. Crazy what you can do now with AI spinning up things like this very quickly. And so they prefer Bitcoin. And of course, it's Bitcoin and stablecoins, right? Tokenized.
Yeah, it's interesting. There were a couple things about this story that struck me, right? One was it's interesting what happens when, let's call it a more objective point of view, analyzes a situation where it doesn't have any priors. I think a lot of what holds people back from just admitting what is so obvious, which is, of course, money that nobody else can turn off. Of course, money that nobody can inflate away to completely debase away your time and energy. Of course, I would prefer a money that doesn't do this. Of course, I want that kind of money. But we get in our own way. Why? Because, well, for some of us, we've been around for a very long time being told that, the dollar is the best and, government, money has to come from government and et cetera, et cetera. And so it's hard, right? It's really hard to untrain that, that indoctrination, if you will, that we've been buying for over 50 years. But when an AI model comes in and says, oh, let me just look objectively at the situation. Oh, okay, well, of course I choose this money. What I'm interested in is, when is AI going to realize that stable coins are just digital fiat, right? Because yes, they're better than whatever they're comparing it to, but at the end of the day, it's still just digital fiat. So I think eventually that number trends toward 100 because, as soon as the lobsters start telling each other that such and such stablecoin froze my account and then I wasn't able to transact, and now my human is really mad. I think that those chats are going to very, very quickly move that number higher to Bitcoin.
Yeah, I think what we're seeing right now is that it's an open playing field, right? These agents are brand new, especially as economic actors. We are just seeing them in the last couple of weeks spot up on the scene, and now they have the ability to go out and pay for things themselves. So what money are they going to choose? We as Bitcoiners, of course, think it makes all the logical sense in the world for them to pick Bitcoin, but that's yet to be seen. I mean, we need to be building for this future, right? And a lot of people are saying, well, this completely just expands the total addressable market for Bitcoin way more than any other thing before it, because now we've got billions of these economic agents who need money. Maybe they're going to pick Bitcoin. So I think if we can really seize this moment and sell it not only to our agents that we use, but to other developers, and show them how Bitcoin is the best money for the internet, the native currency of the internet, I think that it could pay great dividends, not only for Bitcoiners, people who hold Bitcoin, but for people who transact online, and just the future freedom on the internet and the ability to use your money as you please. So
yeah, everyone. I mean, look, merchants can save money through lower fees. Consumers are going to get better access and broader set of choices made available to them. And yeah, I hope we need to continue training and hammering home that message that Bitcoin is better than any other version of fiat, whether it's analog or digital. My son used to think that Chuck E. Cheese tokens were real money when he was 3 years old too. So let's try to accelerate that process and not let the agents confuse digital with money, because they're not necessarily synonymous.
100%. And as you said, we need to accelerate this process. One company that's at the forefront of helping to accelerate this is Square. They launch automated bounties, paying users up to $250 in Bitcoin for making first-time BTC payments to eligible Square sellers through Cash App. So this was a really cool initiative that they launched last week. Of course, they turned on the Square terminals to accept Bitcoin back in November, but now they're continuing the push to incentivize Bitcoiners to go out and evangelize Bitcoin. Go to merchants who use the Square terminals and say, hey, let me pay in Bitcoin. The guy who pays gets paid by Square for turning it on, for helping these merchant realize that they can accept Bitcoin. And now that these Square terminals, they have zero fees when they accept Bitcoin throughout 2026. So go out there, talk to your local Square merchant and get them to turn on Bitcoin, and you'll get paid. Have you paid any merchants in your area via Square yet, Hector?
I've paid a couple, but not they weren't new. Like they were folks who already used had already turned on Bitcoin before.
Cool.
But it's interesting. It's a really smart idea, right? Incent the behavior you want, right? So Square wants more merchants to turn this on. Jack's a big supporter of Bitcoin for a long time, so why not? It costs nothing unless it has a return to it. So it's a pretty smart idea, I think.
And Block was also in the news. Of course, Block is the parent company of Square, Cash App, BitKey, Proto Mining. They just slashed 40% of their workforce, right? And Jack says it's because AI is changing everything and how the business is able to operate. Do you think that is truthful to facts, or did he overhire previously and now is just right-sizing the company?
Yeah, I mean, I would probably have a much more informed answer on that if I was a current or former Block employee, right? So it's I'm not a huge fan of like that kind of speculation necessarily. Usually the truth ends up being somewhere in between the two extremes. So maybe I have no doubt that Jack sees the incredible efficiency gains that that LLMs and AI agents are going to bring to businesses like his, and so maybe he's getting out ahead of the curve. And maybe there's some element of, hey, perhaps we had some redundancy or a little bit of overhiring, and this is an opportunity to maybe right size the workforce. My guess is the truth is somewhere in there. But as he has done many times in his career, he's looking out over the next hill. That's the job of a visionary leader, and he's making the best decision that he sees based on the future that he sees approaching us very, very quickly. So, if you're not first, you're last, to quote Ricky Bobby. So maybe he's trying to be first and get out in front of it. What I do think is there probably will be some companies that maybe aren't quite as on the cutting edge of leveraging these tools as they need to be, that maybe use this as an opportunity to get rid of some folks that maybe they were already thinking of getting rid of, but they have the cover now of saying it's AI driven. That I think is likely to happen. I'm less suspicious of it for somebody like Square with a leader like Jack. It'll be interesting to see if there's any copycats that follow on.
Yeah, he just had a great interview in Wired explaining this. And if you look at some of the tweets from people who work at Block, like the head of product design and some others, they're already detailing how the structure of the company has radically changed in the last couple of weeks, and that everybody's working on all these different projects, and it just seems like a startup again when they're a public company that's pretty massive, thousands and thousands of employees. So I do think you're right that if there is a company to really latch onto this and make the most of it in terms of AI improvements and efficiency and changing company structure, it probably is one that is led by Jack Dorsey. So power to them. They're pushing Bitcoin forward, and I wish them and the people who left Block recently too all the best, right? May they continue to push Bitcoin, as we say here. Okay, now we jump over to regulation. And this was a big one, came out just this last week. The FBI, they got him. Ladies and gentlemen, they got him.
Yeah, they got him.
John DeGita, son of a U.S. government contractor accused of stealing $46 million in seized cryptocurrency from the U.S. Marshal Service, has been arrested in Saint-Martin, an FBI French gendarmerie operation. So Kash Patel, head of the FBI, put out a post last week saying that they got this kid. He was on the run, and flagrantly so. So the story of this is that this guy's dad, John's dad, he runs a service that was hired by the U.S. Marshals to help them custody the Bitcoin that they have seized over the years. And of course, last year, Trump put out an executive order to create the Strategic Bitcoin Reserve, saying that no Bitcoin held by the U.S. government shall be sold. Well, this kid stole some of it, and he was flaunting it online. He dusted the wallets of Zach XBT, a famous, of course, crypto investigator when it comes to these kind of crimes. And he was just he was being very flagrant about it. He got exposed pretty much as the person who stole this stuff by doing a band for band competition online, showing how much wealth he had and exposing that he had access to some of this crypto that was stolen from the government. So it seems as if the stink that was brought up on X by Zach XBT and the whole entire Bitcoin and wider crypto community led to the FBI taking this seriously and hunting him down. And they worked with the French authorities and caught him in the Caribbean, Saint-Martin. And it's pretty crazy to look at this this display here of what he was holding. Of course, a briefcase full of cash. He's got some treasures. He's got some YubiKeys. Yeah, wild. What's your take on this, Hector?
It's wild. Look, I remember when we did a video on this a month or so ago when it first sort of happened, and a couple things, right? First, the only thing that could have been more on the nose than where he got caught is if he would have been renting out Sam Bankman-Fried's old house in the Bahamas or something like that. That would have been classic. But crazy. Probably shouldn't be flaunting these kind of things. Probably a good lesson to people that the Bitcoin blockchain is not anonymous, which is why it's not a great tool for thieves and criminals, as it has so often been accused of being, because the blockchain is forever. So I'm glad they got him. I'm really disappointed in our government's selection and vetting of the contractors that we were using to safeguard part of our Bitcoin strategic reserve. We should probably be more careful about that and deliberate about it. I'm also surprised that Kash Patel was able to take a break from flying on private jets paid for by the government to go to his girlfriend's concerts or chug beers in Italy with the hockey team. So I'm surprised he was able to get enough time to get over there and take care of this. But I guess all's well that ends well, and hopefully we learn a lesson and tighten up our security on what is all of our money.
Yes, yes. The strategic Bitcoin reserve was supposed to come with an audit. That was officially a year ago now. Still no audit. No audit of Fort Knox.
Yeah,
No audit.
yeah, they're gonna do it right after they check the gold. They're gonna check on this. Don't worry, it's in the hopper.
It's pretty crazy. They got to take this stuff more seriously. Pierre Rochard has been hammering this point home hard on X the last couple of weeks that like this is a matter of national security, and if we cannot safeguard our Bitcoin, what can we safeguard? They really got to step up their game here. Speaking of stepping up game, Strike, after many years, finally receives a BIT license from the New York Department of Financial Services, allowing Jack Mallers' Bitcoin payments platform to become one of the few Bitcoin companies permitted to offer services to New York residents. Big news. They've been trying this for years. They finally got through. And yeah, now Strike is available in New York. Hector, you help run a Bitcoin exchange. What is it like dealing with New York City? Why is this such a tough nut to crack? And do you think that the tide is finally turning when it comes to New York?
Yeah, I think eventually it will. I mean, first of all, congratulations to Jack and his whole team. He's a great leader. They have a great company, and I'm really glad to see that happening. Yeah, New York is tough. The process is expensive. It's time consuming. New York's the only state that Rhino's not currently available in the U.S. for some of those same reasons. Of course, we're looking forward to being fast followers to Jack here soon. But look, congratulations to him. It's a big accomplishment, not just for Strike, but also for all of us who are looking to make sure that we're serving as many citizens as possible. And there are similar types of challenges in other jurisdictions outside of the U.S. that don't get as much press here in our country. So look, every step forward that any Bitcoin company makes is a step forward for the entire industry. It's one of the things that I think differentiates Bitcoin right now from some other more mature industries is that when anybody wins, everybody wins. And even though they're call them a competitor or a peer, company in the space, we cheer for all of our Bitcoin only peers because we're putting out the right message. We're trying to help people do the right thing, which is build their wealth, realize their dreams by having the best money on earth as part of their plan. And it's just exciting to see, this win for Jack and for Strike.
And New York is the financial capital of the world. How they've held down Bitcoin adoption in the state for the last since 2017, I believe, the BIT license first came out, correct? So, I mean, whether it's exchanges or mining, I mean, they've done so much to try to curtail Bitcoin adoption within the state, but
yeah, squash competition, right? It's like, or like Upton Sinclair said, it's very hard to get a man to understand a thing if his paycheck depends on him not understanding it, right? Yes. So, of course, the incumbents are going to try to squeeze out, the insurgents. I mean, you see the same thing happening now with the Clarity Act and the bank saying, no, you can't offer interest on stable coins. Only we can offer interest on stable coins. So this is a tale as old as time. It's going to continue, and we just have to keep fighting through it until we succeed.
And what a beautiful transition, because we're just going to highlight now the fact that Trump lambasted the U.S. banks for rejecting a White House compromise on stablecoin provisions, installing the Clarity Act, warning that he will not allow banks to undermine our powerful crypto agenda. So Trump made it clear at first that he was like, come on, crypto guys, Brian Armstrong, stop making this such a battle. And now he's clearly on the side of the crypto industry and fighting back against the banks. He says the Genius Act is being threatened and undermined by the banks, and that is unacceptable. We're not going to allow it. The U.S. needs to get market structure done ASAP. Americans should earn more money on their money. The banks are hitting record profits, and we're not going to allow them to undermine our powerful crypto agenda. They'll end up going to China and other countries if we don't get the Clarity Act taken care of. What do you think about this? Trump coming to bat.
Well, I think it's good. It's always good to have support from the bully pulpit. First of all, he might want to take note that the Genius Act is the one that he already signed into law, 4 or 5 months ago. But, he got it right at the end, though. He got the Clarity Act right at the end. I've always been sort of conflicted about this book because the reality is, if you dig into it, I don't know how much it really does for Bitcoin.
Yeah.
There's probably some good things in it. Sure, if it gets done, that's great. I think we've seen a lot of curious behaviors from the administration and from our president and his family as it relates to how they have connected themselves with the wider crypto industry. And it seems like there's probably some selfish motivations there. And since it's hard to figure that out because I'm not on the inside, I'll just say wherever it lands, it lands. I focus on Bitcoin, and I don't spend a whole lot of time figuring out how crypto and governments are are figuring out how to attack our wealth.
Yeah, the Clarity Act really doesn't do all that much. For Bitcoin, it is a stable coin law, and all the bickering is about how much interest you'll be able to receive on your stablecoin holdings. Banks don't want you to have any. Stablecoin providers want you to have some, and they're fighting. But as you said, it's the incumbents versus the insurgents, and it's just an interesting time, right? I mean, the Bitcoin Policy Institute has been fighting to make sure that the rights for self-custody and whatnot are included in the Clarity Act, and there's been some talk about that might be being removed. That's kind of crazy. Maybe the Clarity Act is not the best thing for Bitcoin at the end of the day. We'll see. But what's very clear is that as an industry, we're at the highest levels and the biggest conversations, and the big boys, the banks that have been here for a very long time, they're kind of scared, and that's not
you can't you can't be part of the decision if you're not part of the conversation, right? So that part of it is good. I do agree with the general concept that if stable coins are going to exist and such, that those providers should be able to offer yield, right? They should not be put at a competitive disadvantage just because they're not one of the big four banks. Competition is part of progress. Progress is inevitable. We can try to push back the future as much as we want, but inevitably money goes where it's treated best. So we have to recognize that if we want to be continue to be leaders in financial innovation, as we have been for a very long time, you have to allow these innovations to come to market, and you have to have everybody have access to them equally.
100%. And if you're watching this show, you are most likely a Bitcoiner. And if you want the best Bitcoin buying experience, you got to head over to Rhino, because in the past, getting Bitcoin financial services was slow, clunky, and scattered across multiple platforms. But Rhino is changing that. Rhino is the next generation Bitcoin banking app designed to handle all of your Bitcoin needs in one place. Here's what you can do with Rhino. Of course, you can buy Bitcoin with some of the lowest fees anywhere. It means getting more sats for every dollar that you spend. Make payments over the Lightning Network instantly with near zero fees. Send cash globally, fast and easy to friends or family around the world over Bitcoin rails. And of course, you can set up a DCA with an automatic savings plan, so you stack sats on your schedule and build wealth over time. And this is just the beginning. Soon, with Rhino, you'll be able to pay bills, direct deposit, borrow against your Bitcoin, and even save for retirement, all within one app. And of course, security is a top priority. We've got biometric verification, 24/7 fraud protection, and the confidence of knowing your Bitcoin is never, ever rehypothecated. And if you are a Casa multi-sig user, you can use Rhino as one of the keys for your multi-sig. So there's so many reasons to go and get started with Rhino today. Head over to rhinobitcoin.com and download the app. Of course, it's on both iOS and Android. And if you use the code Bitcoin News, one word, Bitcoin News, Rhino will drop you $10 in free Bitcoin into your account just for getting started. Rhino is built to keep you in control of your Bitcoin every minute of the day. All right, we're back. Hector, we got so much more to keep going on here. Let's talk about our...
Remember when they used to say nothing ever happens in Bitcoin?
Nothing.
Bitcoin's old technology. It's, boomer technology. I don't know. I kind of miss those days.
No, sir. We are at the highest levels these days. As you can see by Kraken here. Kraken becomes the first crypto bank to receive a Federal Reserve master account, enabling direct Fedwire settlement and integrating regulated fiat liquidity into digital asset markets. Kraken is now recognized by the Federal Reserve, and they got Fedwire connection here. What do you think about this? Are we taking down the banks, or are they becoming another Wall Street entity with this move here?
Yeah, I don't know. It's great. I can't wait to see the the Treasury start issuing SWE backed government bonds. From, I don't know. I get it. They were the first ones to apply, and so they were the first ones to get approved. I'm a lot more interested in seeing the approval come through for for Caitlin Long's Custodia Bank, for example, which my understanding is they were the second applicant. So maybe it's coming soon. If the Fed is supposed to deal with money, then I'm not really sure why, this, broader crypto embrace, again, look, Kraken's run by really, really good folks. I would just prefer to see the Fed sticking with engaging with money, which of course for me would be Bitcoin.
Yes. One interesting tidbit of this is that they are a full reserve model, right? All these other banks that the Fed deals with are fractional reserve. For every $1 that they have in deposits, they can loan out 9. But over here, Kraken, they are full reserve, as was the whole entire point of Custodia. And I think that's why they had so many problems trying to get this account. But of course, with the new administration and different regulatory leanings, these crypto banks are now moving forward with these Fed master accounts. Interesting to see where it goes. And if the fact that it's a full reserve model might be the death blow for banks in the long run. It's pretty hard to.
Let's hope. I mean, they only got this. They got the skinny approval, right? Which basically means that they don't get interest on their excess reserves. They don't get access to the window. So of course, there's still some. They're still sort of a little bit of a second class citizen, but for one step at a time, right? Rome wasn't built in a day. It is a big step to get the approval, even if it's not my preferred vehicle to get the approval. But so hopefully it's the first of many. We want to see equal access to these services, and you're right. It'll be interesting to see if we get more and more fully reserved entities being able to access these services and these rails. It'll be interesting to see what happens to deposits around the banking system, because again, money goes where it's treated best, and I'd much rather have my money in a bank where I know the money's actually there.
One place where money hasn't been treated too well over the last year or so are the Bitcoin treasury companies. And we do have some positive news when it comes to Bitcoin treasury companies, and we'll get to that. But first, we got to highlight the fact that 77% of Bitcoin treasury companies are currently underwater on their Bitcoin purchases, marking the highest level since May 2022. And back in May 2022, it was only strategy, right? And that's so. But yeah, pretty shocking. 77% of Bitcoin treasury companies are underwater. Do you think that this is sort of the end of this story, or just a little lull, and they're going to get right back to ripping and roaring?
I think it probably depends a bit on which of those companies are able to either initiate or acquire, some kind of a profitable operating business to go with the treasury strategy. I think just being a vehicle for holding Bitcoin is not likely to be able to get you a premium against your underlying asset value for very long. When that's all the company has, they really operate a lot more like a closed-end fund, right? And those usually operate at a discount to the asset value because you have employees, you have costs, you have, you can't just operate as, for example, an ETF might. So if you're just going to be, treasury company version 1.0, I don't see those premiums coming back. If, however, you're able to build a solid business on top of that, for example, like what Strategy has done with some of the products that they've developed in the preferred equity space, and obviously their legacy operating company, or Metaplanet, which has the hotel business, although that's it's a small fraction right now, and other companies are talking about acquiring different entities. Pomp's ProCap just acquired their CFO Sylvia tool. So I think that's what you're likely to see, is companies realizing we have to be more than just big buckets of Bitcoin. And the ones who successfully put operating businesses that grow profits and revenue, then those I think are more likely to survive long term.
Yes, as you mentioned, the preferred shares of Strategy are the big unlock, the quote unquote iPhone moment for Strategy, the product that is supposed to take them to this next level of success. Well, it finally seems to be really picking up. Strategy has sold enough STRC this last week to purchase roughly 4,277 BTC estimated across 5 trading days. That's a 455% increase versus the 4-week average after February's drought. So yeah, there wasn't much selling of STRC in February, but it seems as if the market has gotten the memo. They like that juicy 11.5% return, and now they're selling a whole lot. So that was the estimation, 4,277 from STRC Live. Great website. Go check it out. You can see how much strategy is stacking Bitcoin by selling STRC throughout the week. But actually, it came out to over 5,000 was the final number that strategy just released today from their sales last week. And if we look at what's going on right now, huge day. They're able to stack 849 Bitcoin from their sales of STRC just today. And we're just halfway through the trading day. So quite the performance here from STRC. What do you think about all this?
I think STRC is a really interesting product. Look, obviously myself, you, a lot of your listeners are, Bitcoin, cold storage, hodl, be patient, long-term thinking, low time preference. The reality is everybody is not going to take that leap on day one. Different kinds of investors, different pools of capital, have different covenant restrictions. They have different time frames. They have different investment goals. And some of them are just not going to take the leap to the volatility of Bitcoin on day one. But you tell that same person or family office who maybe is dipping a toe in things like private credit, for example, right now, which was sold to them as, high return, low risk. And they're realizing maybe not so much. And you say, well, listen, here is a product where you can get, 3 times almost the return of treasuries. And you can get it in a highly liquid, highly tradable product that you can get in your brokerage account. And that, oh, by the way, also has return of capital dividend treatment, deferred tax treatment. That's a pretty powerful product. And for somebody who is interested in Bitcoin, but they don't want to take on the volatility and they're just looking for income, there's an audience there. And I think that that's what Michael has been looking for with these products is how do I structure types, exposure to Bitcoin that can fit within the constraints of different audiences. And I think it's going to continue to be successful. It's, if we distill it all the way down, you could just say that it's, the highest returning money market account.
Hello? Oh, looks like Hector might have frozen for a second there. We'll wait for him to come on back. Oh, there you are. Hey.
Oh. Nice. So that's all I have to say about that.
Yeah. So, I mean, it's not Bitcoin, right? This is a preferred stock, and it gives you 11.5% yearly, which is nice. Will this create the flywheel for MSTR to continue to accumulate Bitcoin? They've got 738,000 Bitcoin. They're coming up on a Nakamoto, right? On a 1.1 million Bitcoin to match Satoshi's stash there. Do you think that this poses any problems for the Bitcoin network?
Well, I mean, on the one hand, no, right? Just because strategy and when we say strategy, remember that strategy does not own all these Bitcoin, right? All of their shareholders collectively own the Bitcoin, right? Now, obviously, the board can make decisions as to things like voting rights and things like that. Although it depends actually more on the custodian there, but it doesn't give them any more control over the Bitcoin network. It's that's the power of how Bitcoin's consensus works. So it doesn't really pose a threat to the network. Does it create a risk in terms of, centralization or making them a honeypot? If, for example, the government somehow really got serious and said, we actually need a real strategic Bitcoin reserve. And what we are going to do, your Bitcoin Act, Senator Lummis, And here's how we're going to do it. We're just going to nationalize strategy, and we're going to take over the Bitcoin because it's, a supply chain risk or, national security, priority, maybe. But at the end of the day, if you're holding your Bitcoin in cold storage, if the network is sufficiently secure, which it is, if the adoption of Bitcoin as whether it's a store of value or a wider merchant adoption, if that is increasing, which it is, then Bitcoin is likely to be a good bet for a very, very long time, regardless of, the concentration of any particular holder.
Well, I saw Predator today, and he's worried that sailors stacking too much Bitcoin is going to hurt the Bitcoin Gini coefficient.
Well, you'll have to get Predator on to explain those high-level, much more complicated topics that I don't understand.
I think the distribution of wealth in the Bitcoin ecosystem is just too skewed towards Michael.
Sure, but how does that compare to to the distribution as it existed 4 or 5 years ago, right? I mean, we've been talking for 6 or 8 months about, hey, whales are still controlling the network too much, and but now they're distributing the coins, and well, that's bad, and then that's good because it means that you have a wider. So there's probably pros and cons on both sides, and whether it's Predator or get somebody like James Lavish or Lynn Alden or those folks on here, and they can probably provide a lot deeper analysis on those elements.
There we go. Got another story, a really interesting one that I want to talk to you about Bitcoin mining in space. However, before we get to that, we got to give a shout out to our friends over at Arch. Let me tell you about Arch, the world's leading destination for Bitcoin-backed loans. Arch provides world-class security and a white glove service so you never have to sell your Bitcoin. If you're listening to the stream, you did the hard part, you stacked, you held, but at the end of the day, you don't want to sell your Bitcoin, right? Like, that's just not what we want to do here. We want to continue to stack, and you do that through Arch because Arch allows you to take a loan out against your Bitcoin. And what's so amazing about that is that, I mean, it's like a flexible line of credit with rates starting as low as 8.5% APR. When you borrow what you need, repay anytime, and only pay interest on what you use, all without triggering a tax event. The best part, your Bitcoin stays yours. Arch has a strict no rehypothecation policy, so your collateral is never lent out. It's held in qualified, insured, bankruptcy remote custody with full transparency. Get your cash today at archlending.com. That's ARCH lending.com/daily stack. Use that /daily stack. Let them know that you came from this show. You heard about it here, and we'd be much grateful for that. Now, let's get into this StarCloud story. So StarCloud is a U.S. startup, and it says that they plan to launch a Bitcoin mining ASIC into orbit later this year, potentially becoming the first company to mine Bitcoin in space using solar-powered orbital data centers. What's going on here, Hector? Do you think this is the real deal?
That feels like a little bit of a publicity stunt to me, or maybe some virtue signaling. When I went and I dug into the article, what they're really building is a data center, and it seems like the vast majority of what they're going to dedicate that data center to is AI, is HPC, and then they're like, and we're gonna have Bitcoin too. So it was like, here's our AI center now with Bitcoin. It's like, Fruity Pebbles now with riboflavin. It's so I don't know what it means. It's a nice headline grabber. I'm not sure. I'm not sure how much it really matters.
Yeah. So it does seem as if data centers in space is this big new narrative. Nobody wants to have these data centers in their backyard. The electricity price goes up. Elon's been harping on how effective solar is, especially if you can harness the energy outside of the atmosphere. And so now these guys are saying, hey, well, Bitcoin mining is a great way to use free electricity. Let's try to jump in on this. Will it be effective? One thing that he did say is that Bitcoin miners, I mean, every 2 years, you need to get a completely new fleet, essentially, just because they progress so quickly and you are running old tech if you don't update your machines. But had an interesting take here by our good friend Steve Perinow, who Money or Debt is his title on X, of course. He is a Harvard-trained astrophysicist, and he had the same take as you. Great marketing, but fully loaded launch and operational costs tend to be 2 orders of magnitude higher than the cost of the rig. Lift to lower Earth orbit, batteries, solar arrays, radiation fins, communications. You could run a miner for a century on Earth for the same cost. Also, miners are uneconomic after 2 or 3 years. Great marketing.
Yeah, good luck. Good luck to them. I hope it works out, and hope they get a lot of publicity out of it. Seems like they have already.
They certainly have. I mean, it's a great headline, right? Bitcoin mining in space. In the future, Bitcoin will be mined in space.
Yeah.
But
by the way, those those GPUs need to be replaced every so often too. They're not they're not eternal. No. Just because you throw the H100 up there, it doesn't mean that it's going to be as useful to you 5 or 10 years from now.
They depreciate as well. Indeed. Well, you have somebody new getting into Bitcoin mining, StarCloud over here, and you have somebody getting out. Core Scientific sold 1,900 Bitcoin in January for $175 million at an average price of $92K and secured a $500 million line of credit from Morgan Stanley as it plans to liquidate its remaining Bitcoin holdings in 2026 to fund an AI pivot. So what do you think about this? Core Scientific, one of the bigger names. I mean, they had problems back at the end of the last bull run, right? They were sort of like were close to going bankrupt, and then they got saved, and now they're pivoting out of Bitcoin mining and making a full pivot into AI. What do you think about this news?
Yeah, look, mining is a ruthless business, not just in Bitcoin. Commodity mining, generally speaking, is an incredibly ruthless industry. So Bitcoin is no different. And I don't know anything about their underlying, sort of fundamentals or their capital efficiency or anything like that. But the market or these actions would indicate that for whatever reason, it's not, it's not a profitable venture for them, or at least not profitable enough for them to stay in it. And so looks like they're dropping out. We get headlines like this, maybe not on the same scale, but we get these kind of headlines in every cycle. And, only the strong survive, especially in Bitcoin mining. So it maybe is a good idea that they're pivoting to that if they're not going to be able to mine effectively. And, that hash rate will redistribute across the network to others who have, lower cost of power or lower overall, capital intensity. And Bitcoin will continue TikTok next block.
Yeah. I do think that in the future, we will look back on this time of massive industrial scale miners, and it will be a blip in Bitcoin history. Bitcoin mining is meant to be at the edges, in the fringes, where stranded energy is very cheap, and then you can build up an ecosystem and an economy around that. Whether it's in Africa or Latin America, it's supposed to be this outlier thing. And whereas these HPC data centers, they require such high maintenance. You cannot have a second of downtime. Bitcoin miners are rough and tumble. They're willing and able to take on the hardship of those situations. And so I think that Bitcoin mining will hopefully shrink and decentralize while maintaining this unbelievable high hash rate of over 1 zettahash. Still very, very impressive numbers, even with these big guys transitioning over to AI.
Yeah. AI is not a pioneer species, to quote Brandon Quittem, right? So yeah, I agree.
And another cool story to come out of the mining world this last week: Nice Hash Easy Mining user spent $70 renting hash rate and mined a Bitcoin block, earning 3.09 BTC, worth around $220,000. The 4th block found using rented hash rate since December. So Nice Hash has gotten big into this. Brains has also started their own, you can rent hash rate from them, and they've been lucky as heck, man. Unbelievable. 4 blocks found since December, and these people are spending no more than $200 to rent out this hash rate. A couple of them have spent $70 to rent out a petahash for a couple of hours, and then boom, you got $220,000 for spending 70. Pretty unbelievable stuff.
Yeah, it's impressive. Rob, can I borrow $200?
Feel lucky? Feel lucky?
Why not, right? Hey, we're going to be in Vegas in a month and a half, right? So 200 to 200 plus thousand. It almost sounds like Bitcoin returns.
Yeah, no, super cool stuff. And I do think that more people are going to be interested in this, especially with headlines like this. We've got bid access finding blocks. We got rented hash power finding blocks. That's the beauty of the Bitcoin mining game, is that anybody can enter into it, right? It's permissionless.
Yep.
And you can increase your odds by having more hash power. But at the end of the day, one roll of the dice is just one roll of the dice. And it's only one of these little ASIC chips in all these hundreds of thousands of miners across the world that will find a block every 10 minutes. And hey, it could be you. It could be you. Why not? In the words of the McDonald's ad, hey, it could happen.
It could happen. It's more likely to happen than if you tried to win that $1 million on the McDonald's Monopoly game.
There you go. Unless you were that guy who learned how to
exactly.
game it.
Exactly.
Nice, Hector. Well, we're coming up towards the end of our time here, and I want to allow you to have a quick minute to give a shout out to all the things you're doing with Rhino, Meet Premier. Talk about how people can find you and see what you're doing in the world of Bitcoin.
Yeah, thanks. And it was, again, great to be on. I enjoyed kicking around these topics with you. Yeah, as far as finding me, you can usually find me, my first name, last name on, most platforms. I'm primarily on X and Nostr and LinkedIn, but reach out to me. However, you can also, of course, find me at Rhino Bitcoin, which is where I spend most of my time, just trying to help people get access to buying Bitcoin and using Bitcoin in whatever way they think makes the most sense for their particular situation. And I do also serve on the board at Meet Premier Bitcoin, which is a global Bitcoin nonprofit that provides education courses and curricula for all kinds of folks. Initially, sort of a high school diploma course. That's the one they're most famous for. But then also they've got Bitcoin for organizations, Bitcoin for juniors. So if you're looking to teach folks about Bitcoin and you're trying to figure out where do I get the curriculum, you can go to Meet Premier. It's open source, available freely to anybody in the world. And they're just a great organization to support.
Absolutely. Before you go, I want to play you this clip real quick from your friend Anthony Pompliano. This just came out this morning on CNBC.
All together, we've got a war in Iran. We've got a spike, at least for now, 8-day spike in energy prices. We've got AI disruption concerns. We've got cracks in private credit, and we have a weaker jobs report. How do you invest right now?
Buy Bitcoin.
There you go. Couldn't have said it better myself, right, Hector?
Absolutely, right. James put out an article over the weekend from The Informationist that I always read. Really, really good newsletter. And he talked about, where do you go when everything's up? Stocks up, everything up, everything up. Where do you go? And maybe Bitcoin's been leading the way these last few months. That there's some troubled waters ahead, and Bitcoin's out in front. Might be a good place to look. Might be a good idea to pick some up just in case it catches on.
Just in case it catches on. All right, everybody. Thank you so much for tuning in to Bitcoin News Weekly as part of the Daily Stack. Of course, we are live 12:30 p.m. every single day, Monday through Friday, bringing you the biggest news in Bitcoin, markets, AI, all the stuff. We are covering it here. And the show does not stop. We've got a big guest coming up next. We have James Seifert of Bloomberg talking about Bitcoin ETFs and everything that is going on now that we are in year 3 of the Bitcoin ETFs, the most successful launch of any ETFs in the history of ETFs. So hold on tight. Going to throw on the 5-minute timer and bring on the next show. Hector, thank you so much for being a part of the Daily Stack today. Got to have you back in the future. Maintain your #1 position as the most frequent guest of Bitcoin News Weekly.
Thanks, Rob. It's great to be with you again.
Cheers. Bye-bye.
right, welcome back to the Daily Stack. Sean Ristow here, my co-host Avi Mash, and we also have James Seffert with us from Bloomberg Intelligence, senior ETF analyst. This is now, James, the second time you and I have chatted. We did one live in Vegas, and now we're doing it here.
Yeah, exactly. Vegas feels like I don't know. I guess it's almost about a year ago, but if you told me it was 2 or 3 years ago, I might have believed you.
Yeah, I know, right? It was one of those things. I mean, it's kind of crazy to think that we're going to be back out there here in the not so distant future.
Yeah, I'm still up in the air if I'm going to be able to make it or not, but we will see. I actually am going to Vegas for an ETF specific conference next week.
Yeah.
And if I'm being completely honest, I am not a fan of Vegas.
You know, I mean, at our Avi and I, where we worked at a previous company, I spent a lot of time out in Vegas, and I got to tell you, we were up in Summerlin. We were not in the Strip, so it wasn't as, didn't have the full Vegas experience. But I got to tell you, when you get home, you kind of got to.
There's no place you want to leave more ever.
Yeah, it's like you got to take 2 showers. You just feel like, nasty. But yeah, I digress. So we're with you there on that. But no, man, great to see you. Thanks for coming back on the show. Quite a bit going on here in the Bitcoin overall market, I would say. Last night we had oil reach its fastest. It went the fastest, I think, grew on an open, or is what I saw. I mean, it was up 22% in, just from the open at 5 o'clock Central.
Yeah, I think it was like the biggest move in dollars and percent that we've ever seen. If it holds, it didn't hold, thankfully, but they got up like $120 a barrel on the front month future contracts. So,
right, and immediately you saw Bitcoin sell off about $1,300, and then following that, you also had all over my X handle was people talking about how, this is the dump for, tomorrow. This is just the start of where it's going to go once the ETFs open. I mean, so, you've been tracking these Bitcoin ETFs for quite some time. What are your current thoughts on the current state of the market with IBIT, with all the other, Bitcoin ETFs? I mean, it was the fastest ETF that scaled to 100 billion. And now it's, Bitcoin's hit some rough water, but I mean, what are you seeing?
Yeah, I mean, I think IBIT technically intraday hit 100 bill, but it never actually closed at 100 bill. It was like 99 point something.
Right.
But we don't need to go. It was the fastest ETF to grow to that sort of extreme that we've ever seen, and nothing else is even close. Like it's in a world of its own. And even still, there's been outflows, but everyone's talking about the outflows, right? So there were outflows on Thursday and Friday last week. That amounted to about 600 million, which is a reversal of like the prior 10-ish trading days. Like it was taking in money hand over fist for the first time in a while.
Yeah.
But if you go back to 1010, when markets blew up, automated deleveraging across multiple platforms, some of those perp exchanges, it wasn't a good thing, right? The ETFs, granted, Bitcoin fell more than 50%, right? Or about 50%, depending on where you want to put it. And we saw outflows, and the outflows at their peak reached just shy of 9 bill. And everyone was talking about that. Obviously, the people who hate this space are, jumping on Bitcoin's figurative grave, even though we don't need to go there. But if you take a step back, they took in like 30 billion from the tariff tantrum bottom until 1010. So yes, we saw 9 billion go out. Almost 2 billion has come back in the last 10-ish days. But in the grand scheme of things, if you told me an asset is going to drop 50+% and they were only going to lose only 12 to 15% of the flows are going to leave, I'd be like, damn, that's pretty good.
Yeah,
those buyers have diamond hands if they're still hanging tough.
Yeah, no, for sure. Avi, turn it over.
Yeah, I had a question too. Just and this is something we talk about all the time, is you think about the Bitcoin ETFs, and I'm in the space, right? And so everyone knows IBIT, we know the Bitwises of the world. There's a few others, call it a handful that people know. IBIT owns about like 70%, I want to say, of the volume, or that they control 70% of the volume with like 66 billion roughly in AUM. At what point do you feel like this level of concentration becomes more of a structural problem? Do you think, even with MSTR, them holding such a massive amount, and I just saw today, like Sailor may even, have more under management shortly. What are your thoughts in terms of like the structural risk of having so much with two properties here?
So we can go down like the tinfoil hat route, but like I would say there's a few things I would point out here. One, IBIT, it actually has more than 70%. If you go by just volume, not AUM, it's like they dominate. IBIT is the number one option by large. And if you look at options market, the other options markets on the 11 other ETFs don't even matter. Like they're not even, if I chart them in a stack bar chart, you can't see any other colors for the most part, most days when you look at volume and open interest. So IBIT is the number one product for trading, liquidity, you name it. There's plenty of other people using other products, some of the ones you mentioned. There's, like I said, 10 or 11 other products besides IBIT. And they all have they have hundreds of millions of dollars. They're not like just nothing funds. It's just that they're not, nearly $100 billion products, or nearly almost hit 100 billion. The problem with that logic, it's the same logic that a lot of people, if you listen to podcasts who don't understand finance, will say BlackRock and Vanguard own every company. Like they control the world. They control all these companies. Look at the top holders.
Yeah.
And like you're missing, it's not the forest for the trees, but you're not understanding what these companies do. Like I own a bunch of ETFs that are Vanguard ETFs and mutual funds, and same with BlackRock. I have control over those shares. And so people like to say BlackRock is dumping. And it's like, no, that's people like me and you guys selling their ETF shares because they don't want exposure to Bitcoin, or maybe they want to get exposure somewhere else, or any host of reasons. Like a lot of people are using these things for the basis trade. So it's not necessarily just directional demand when money is coming in and out. So that's why you need people looking at this and being like, is this long-term directional demand, or is this people piling in to take advantage of a basis trade, which is like delta neutral? So when you look at it that way, it's kind of like, okay, yeah, these are getting concentrated, but at the end of the day, I'm not that concerned about it because it's an extremely efficient market. The end holders of these assets are mom and pop investors, institutions, endowments, the sovereign wealth funds. Like those are the people that own the Bitcoin at the end of the day. And BlackRock is beholden to those holders. It's not like they can be like doing whatever they want with this Bitcoin. The same goes for every other ETF. MicroStrategy, if we want to go down that route too, it's a little bit different. It's not as clear cut, but again, the same thing. The MicroStrategy shareholders are the ones that control it. Granted, the board can make decisions. It's ultimately voted on. Saylor has like a lot. He doesn't own complete control voting power, but he has a lot of sway, way more than anybody in the ETF world does.
Mm-hmm. I mean, when you look at the ETF space, it's interesting what you just brought up, because it's something that I say all the time. When you go on any of these social media platforms, it's, oh no, BlackRock's selling, Bitwise is selling. What was the other one? That Jane Street is rigging the market. Like, I mean, take your pick of whatever comes for that day of why people think it's dumping. But at the end of the day, the truth is, like, these are individuals that are making decisions, or they're holding it in some type of basket or portfolio that, the model says, hey, we're over allocated, things like that. But I guess where I'm going with all this is, what have you been seeing on that front? Are you seeing more on who is the actual underlying user really purchasing these ETFs? Is it more retail? Is it more institutional? Are you seeing more allocation than you did before? Tell us a little about that.
Yeah, good question. So the real answer is, the one way that we can see who really holds these things is via 13F filing. So institutions of a certain size and a certain amount, you name it, they're required to disclose what they hold. It's meant for equity. It's meant for stocks.
Right.
But ETFs kind of fit into that. So we can actually see ETF reporting, which is a good thing for us and for me. And before I even get to this, I do want to point something out. A lot of people like to think like they figured out what's moving the market, right? One, the market went down. And we don't have a clear-cut example of like what the cause is. So Jane Street and BlackRock, they're like good, like people we can blame. We don't have an SBF this time. We don't have like a Luna, a Terra that we can say like, this is exactly what caused things to blow up. So I think part of it is people just trying to ascribe blame somewhere. I mean, who knows? I'm not going to pretend to say that it's all of it is 100% not happening. It could be happening in the fringes, but believe me, if ETFs were the one determining where price was going on Bitcoin, one, we wouldn't be as low as we are, and two, I would be. I know enough about what's going on and can read the tea leaves pretty well that I would be a lot better at predicting what's going to happen next. So they're a piece of the market, right? Like a market is a whole bunch of people doing a whole bunch of things. We can see more detailed stuff on like on-chain metrics. There's plenty of on-chain analysts that are way better than me that can tell you that like the OGs, the whales were selling anytime it was over 100K, even into like the $70,000 mark over the last few months, they were still selling on a net basis. So, and we did see some selling of the ETFs too. So from those 13Fs, I like to break it down into different categories. My colleague and
I think he froze here.
We'll get him back. We'll get him back.
So what happens when you go live, folks? Anything could happen. We lost you. It looks like you're back now.
What did you hear me say last? Apologies.
You were talking about Eric, I think.
Oh, Sharoon.
Okay.
Sorry. So Sharoon is the one that's on the back end doing all this stuff for me. But we look at all of the 13F filings on every individual Bitcoin ETF, and we try to understand what the holders are. We look at the changes every quarter. The problem is we can see it on quarter end, and we get it a 45-day delay, which to anyone in crypto is like an absolute freaking eternity because you can see when shit is moving real time on chain, right? But essentially, and so we have data through the end of the year, so through the end of 2025. And we know that investment advisors, the people that are managing money for everyday mom and pops or high net worth people, they were net sellers. There were plenty of buyers, but on a net basis, they were sellers. Another big seller, hedge funds. Hedge funds were the biggest buyers initially of the ETFs, and they were doing the basis trade. They were not net long. So everyone's like, look at these massive hedge funds buying all this stock of the ETFs. One, they're market makers. So they have positions where they're just obviously bidding and selling. They usually don't really have price exposure to these assets. But they're also doing basis trades where they're going long the asset, the ETF, and shorting the futures market. And if there's a difference there, they're earning that return net of whatever fees they're paying. And there were times like at the end of 2024 where like that was like a 20% return, like virtually risk-free. So tons of money piled in. A lot of that money came out in early 2025. I think some more of that money came out in the end of 4Q 2025.
There was a lot of that in the grayscale.
Exactly.
I mean, that was so heavy on that basis trade. Like, because some of my friends were telling me, they're like, holy shit, look at this opportunity right here. And I'm like, you better know what you're doing. Otherwise, you're going to get whacked real quick.
Yeah. So they know as long as the basis risk is essentially that the underlying ETF or the futures don't correlate to each other, which hasn't happened. The ETFs have operated essentially flawlessly as far as I'm concerned. And I think so that basis yield dipped pretty low. So we're like shy of 5. We're below 5% right now. Last I checked, I would have to look again, but it used to be consistently, we would spike over 10%, get to 20% at times. It very rarely spikes that high now. It's much more compressed. So I think even more money has come out in the fourth quarter from anyone that was trying to play that sort of basis trade. So, but on the net basis, like there's still, the other thing I would say is the numbers I'm talking about, as of 3Q, so September 2025, we knew 26 to 27% of the holders based on these 13Fs. So the rest is retail or overseas people or institutions that aren't large enough that are required to follow 13F. That number went down. We only know 24%. So like everything I'm talking about is like I can only see like a little bit of what's going on, and those are the institutions. The vast majority of it is likely still retail.
Yeah. And how much of that is leveraged that's the thing that I think people aren't paying attention to is, so you have these movements in the market like yesterday. Okay. Take bonds, take, futures on equities. We were down 1,100 points on the open yesterday. I mean, it was like pandemonium. And now, we bought back. But where I'm going with this is like Bitcoin, now that it is part of ETF, it's going to fall into the same bucket as all these other assets. When it's a risk off game, I don't foresee people buying Bitcoin ETFs. You know what I mean? Like, is that what you're seeing on your end, or?
I mean, partially. I mean, one of the notes I wrote that goes along with what you're saying is I was looking at how correlated Bitcoin and software stocks were towards the end of the fourth
Oh, you
quarter
mean
and towards the
Bitcoin
start of
and the
this year.
Nasdaq? Yeah.
Yeah, and it was even like the Nasdaq
IGV.
at last year, but it was IGV, which is like a software stock, so it only holds the software names. They're getting crushed by this AI stuff, and Bitcoin was just going down with it. And there was two things I noticed. One, obviously, if you look at different assets, whether it's Nasdaq at times, sometimes it's the S&P 500, sometimes it's gold, like it's not actually correlated over longer time periods with any of these things, aside from just generally it is considered a risk asset. It's kind of broken down a little bit with the software stuff, but still somewhat correlated. The one thing I would say is like people were buying hand over fist. They were jumping in, trying to call the bottom in software. That was not happening with the Bitcoin ETFs. And I think largely it's because people know this asset is subject to massive downturns. Like 70% is somewhat routine in a 4-year cycle for Bitcoin. And I think people were just waiting for something to signal that we're near at least a near-term bottom, and there was nothing showing that. There was like a couple higher low that happened, and then another higher low that happened like after the U.S. Attacked Iran. And I think after that, people were like, okay, I'm going to buy in again and try to call a bottom. And I think the last 2 days of last week, we saw some people some money come out. But the other thing I would say is like we're talking about this, and obviously it was a sell-off, but like if you look at the close on Friday and you look at the current price of Bitcoin, it's within a couple $100 right now. Like everyone's talking about the run up that went over 70 and things like that, but for the most part, like it's still kind of flat.
Right.
So like we're trying to pick things. And the other thing I would say when I was looking at those software and Bitcoin correlations is I tend to view Bitcoin as a potential store value asset, right? That's the way I view it. I think it has a lot of the criteria that would meet for something to potentially be viewed as a store value asset. Obviously, I'm assuming you guys, a lot of people in the Bitcoin space see it that way. They like it. It's actually better than gold in many things. One thing it's not better than gold is its price stability, right? It's very volatile. And the fact of the matter is, like, even BlackRock is pushing this as like a hedge against currency debasement, store value asset, all these things, like big institutions. Doesn't matter what we think, what different institutions think. The market treats this thing like a risk asset right now. Could that change years from now? I don't know. I'm not going to pretend to say it definitely will, but like I think it could. But right now, it doesn't matter. As you're saying, this thing is a risk asset. There is some bottom buying. There is some people coming in that are long-term buy and hold investors to the ETFs. We're seeing that with flows. But a lot of it right now seems to be more short-term, like calling tactical bottoms, selling rallies. We're in a bear market, and people trade bear markets differently than when they trade bull markets. They're buying low and trying to sell after a rally. So it's harder to get above those, key technical levels. And Bitcoin itself.
I mean, how many people have you ever seen where trying to call the bottom? Like, I can't tell you how many people I know that have just gotten toasted because they're like, oh, this is the bottom. We're down another $5,000. Well, maybe this is the bottom. All right, well, keep going. You'll catch one of them.
I'm curious, what like catalysts do you still see that are out there? Because the ETFs obviously were big. I think we got the Clarity Act coming up, but like what does bring retail back? Because maybe it's a microcosm amongst my friends, but they're not buying Bitcoin necessarily right now. I'm doing my best to tell them to, but at the same time, it feels like a lot of retailers are still on the sidelines. And with AI coming up and potential people losing jobs, even more liquidity is off the table potentially. So curious what you're seeing and thoughts overall there.
I mean, the first thing that comes to mind is Clarity Act, regulatory certainty in the U.S. Granted,
anything except
that.
clear.
Yeah, granted, that's not going to be hugely impactful for Bitcoin itself. More just crypto as a whole. These other coins will probably benefit more from that. But I think anything that'll stabilize the system and provide upward momentum would help Bitcoin itself. Like where crypto goes, Bitcoin goes, as much as a Bitcoin maxi might hate to say it. Like there's correlations that go on there. There's plenty of other things. Institutions actually adopting this. Morgan Stanley's launching Bitcoin, Solana, and Ethereum ETFs. Like these institutions they're still building. They're still like doing things in the back end. They were building for years now, and they're trying to get in. We're going to see more institutions come in. So you see governments taking it more seriously. Who knows? Honestly, the people
NASDAQ just announced this morning with Kraken doing stocks. But
the problem is, like, we're going in one direction right now. So you need some sort of mega catalyst to kind of push it in a positive direction. Even then, we're kind of in a bear market. So even anything could be like a bear market rally, right? So grand scheme of things, sellers that are thinking about selling, short-term holders need to be washed out. A lot of them, from my point of view, kind of have been. But there's a whole bunch of things that could be catalysts forward. But like this thing trades on a more Bitcoin trades like so technically, I'm not a technical analyst. I'm not somebody who's like a diehard believer. But like this thing trades like, if you look at 200-day moving averages, you look at all these different technical tools, and Bitcoin trades more than anything I know along those lines. Partially because it's harder to know what the fundamental value of Bitcoin is. It's not like a stock. I'm not actually able to do a discounted cash flow analysis to understand like how much those cash flows might be worth and all these different things. It's a little harder to come up with an actual hardcore value. But yeah, I mean, there's a whole bunch of things, but coming up with more quantum secure ways to do things that might alleviate some of the institutions that are hesitant. But I will say a lot of the advisors that I'm talking to and people I've been talking to that have been interested in this space were like, I'm not doing it now. Like I wasn't getting interested now. And then all of a sudden it's down and they're second guessing it now. They're taking a second look at looking at some of these ETFs to put in a portfolio. They just didn't want to do it when Bitcoin was 120K. Now it's like, okay, maybe we can actually put these in a client portfolio for anyone who hasn't. So I think one of the things I've been saying about the ETFs and this institutional move, I thought they were going to dampen volatility a little bit. If we don't go any lower, maybe they have. We didn't have a blow off top, but like if you're going to put a 3% allocation in a client portfolio, if you're going to set it up and say, I want a 3% allocation, if the price goes down, you're going to buy. And if price goes up, you're going to sell. So if it goes from 3% to 6%, you're going to sell off a little bit. If it goes from 3% to 1.5%, you're going to buy back a little bit. And I think that rebalancing stuff could limit the tails of what could happen. Obviously, assuming nothing crazy happens elsewhere, but with the conflict in the Middle East, who knows what's going to happen to risk assets? So I won't pretend to know what they are. But like, I think long-term institutions, advisors, people putting money to work in the spaces in a long-term way will decrease the volatility of Bitcoin's price.
I mean, I think, a 3% allocation to a portfolio is really not that much in the grand scheme of things. And so when you look at things overall, my question to you is, do you foresee, it's been heavily correlated to AI, and with AI being a risk on obviously what's going on in the Middle East, to me, it just seems like the only way we're going to get a path forward here is people want a surety. They want to know that, hey, shit's not hitting the fan all over the world. And that being said, now we'll come back into these more risk on assets, which for the boomers and others that don't trade in the spot market, they're going to use ETFs.
Yeah. I mean, I tend to agree. I mean, you just look at what's going on with risk assets overall. They're all going down. So as soon as like potentially some of the stuff in the Middle East is cleared up, maybe that could be another catalyst that could happen. But at the end of the day, like if you look at those fear and greed indices, they're pretty much showing a lot of fear at this point. And there's not much else you can do about it. And like I said, market participants, for better or worse, view this thing as a risk asset, and it's correlated to software stocks and things that are getting disrupted by AI, which is ironic because another catalyst could be all of a sudden like a bunch of these AI protocols or agents start using things like stable coins and crypto and Bitcoin. It might be like another positive catalyst. Obviously there's plenty of people out there saying that like cryptocurrency, Bitcoin, stable coins, you name it, make more sense for agents to use. But we're still in like we're not even in the first inning. I would say we're in the pregame of seeing if that actually plays out. But like, that's another catalyst I would point to. It's just, we're in a bear market.
I do think you're right there. I think stable coins will probably be the currency. It is funny if you ask like any of these AIs what the best form of money is, they tend to go towards Bitcoin. So I don't know if that's just based off my chat history and they're like, all right, he'll like this answer, but that's what pops up for me.
Pops up for me too.
Yeah. The other angle there too is like in this world of AI where even Bloomberg, for example, I saw some tweet the other day that someone created the new Bloomberg terminal, right? Obviously you guys have proprietary things. It's not going to come close to it, but people are creating these like chat bots that are ultimately doing that. But where I'm going with this is I think, in this world where anything can be replicated and duplicated so quickly, Bitcoin is kind of the one thing that can't be truly affected by AI in some ways, right? Because there's 21 million ever. You're not going to go around that.
So it is kind of 20th million one.
Yeah, only 1 million left.
Yeah. So, I mean, there's an angle there, I think, too. I got to wrap my head around what I'm trying to say here more, but I think it is kind of the one central truth here that still remains. It's like, all right, this is not like some something you can just duplicate or replicate and copy the new Salesforce, for example. Like, this is something that's going to stay Bitcoin, and I think it will, bubble up to the top eventually as people start to realize that this can't be manipulated as much.
Yeah, I will say a few things. One, I've been at Bloomberg 12 years, just about, and every year there's a new Bloomberg killer. I will say this AI side of things, it seems a little more serious than anything else I've been paying attention to since I got here. And I would also say we're building our own AI tools internally. There's literally a function that is basically a Bloomberg chatbot, and they've been dramatically investing in and pushing it forward. So it's not like all these other companies are like taking this lying down, is what I would say, first of all. And then second of all, I would say on the stablecoin side of things, I do think one of the things that has happened with stablecoins, and this is my view, and this has been my view for a while, stablecoins have sucked out a lot of the medium of exchange potential use cases from Bitcoin and other cryptos. Even if you think the dollar is worthless and it's going to zero, it's going to be fully debased, it doesn't matter. The world market's still pricing the dollar. Everyone's using the dollar. That medium of exchange narrative on Bitcoin has definitely been hurt by the use of stablecoins. Could that change? I don't know, 20 years from now, maybe. I'm not going to pretend to say it, but like that is definitely something that happened.
Well, it goes back to trust. And I deal with this with my day job, like with working with banks and credit unions. It's 100% trust. And if they already trust, these institutions, quote trust, then they're going to use the tools that they give. They're not going to use some brand new, like most people still are not even familiar with how Bitcoin works, how a blockchain works, let alone how finance works. And, you're trying to shove finance, tech, and this whole new structure into basically someone's head. And they, as I said, they don't understand finance, and let alone they don't even have investing. They're not investing already. So I think it's, from my point of view, I think you're going to see on the back end, I think you'll see stable coins more for settlement. And then I think, Bitcoin obviously started out as a currency, store of value now. I think, how long's gold been around? A long time. It's going to take.
It's been used as money for at least 5,000 years, if you can go back, or at least a store of value and had value.
Right.
So,
right. So,
what kind of, I don't know if you want to go on record here for predictions for how we end the year for 2026. I know a lot can happen. And as you said before, a day is a month in Bitcoin, a month's a year in Bitcoin. So like anything could happen. But from what your data is showing, do you think we recover this year, or you think 2026 is kind of going to stay as a bear market for most of the year?
I'm not really allowed to even say that, but I'll say a few things on it. First thing, actually, there was a thing I wanted to say to your question last time about Bitcoin being a thing all its own. And I was thinking about the woman at the Financial Times that was saying her teeth are rare. I will say, there's like people I work with at Bloomberg view it as like there's too many other cryptos and Bitcoin's not unique. And so it loses its store of value and scarcity because there's so many other cryptos, which I do not ascribe to whatsoever. So there are plenty of people in the market who do not believe Bitcoin is scarce or valuable in any way whatsoever. So yeah, I just wanted to say that real quick. And then what was your question again that you just asked? Oh, where are the markets going?
Yeah.
I would say I pay attention to the ETFs more than anything. I look at on-chain metrics. I think bear markets tend to be measured. Most people think about them in price and drop-offs, but they can also be measured in length of time. Like for the most part, you tend to need to bottom and then go sideways for a while before anything like Bitcoin tends to become a coiled spring at some point if you're a long-term believer in it. So I think you have to consider the fact that it just takes time to wash everything out. And the other thing is like, for better or worse, with all this institutional adoption, with the ETFs, this has become more and more tied into the traditional financial markets and risk assets. So like, I think Bitcoin has a lot of idiosyncrasies right now. So like it beats to its own drum, it'll go up and down on its own. But if we have massive like risk off selling
like yesterday.
Like it's going to hit Bitcoin. Like, so like if the S&P 500 is going to go into a bear market because of whatever's going on in the Middle East and oil goes to $200 a barrel, like, don't be surprised. Yeah, theoretically, Bitcoin shouldn't be affected by that. But if you have the same holders, we saw this with like the sell-off in tech at various times in 2020. Like, it doesn't matter if it should or shouldn't be impacted. If somebody's holding assets that are going down a ton, they're going to sell whatever they can to meet margin or just to go to cash. And correlations go to 1 in bear markets. So I would say like those are the ways that I tend to think about this, and it's been ingratiated in the financial markets. So, and then the final thing I'll say, go ahead. Sorry.
No, I was just going to say, in the final, the one thing I'll say on that is like, and most people aren't even trading this themselves. They're holding it. If you're holding the ETF, it's most likely in some type of model, in a portfolio.
Yeah, there is a lot of models that do hold this. Ironically, the Bitcoin ETFs aren't actually in that many models from what we can tell. So there's only a small so ETF model portfolios are like these portfolios where an advisor will sign up to be using BlackRock's model or some other active manager's model, and they put these ETFs in there and they just do it for you and they maintain it. There's very few models out there that hold the Bitcoin ETFs, but they are becoming, those models themselves are massive. We're talking hundreds of billions of dollars that are tracking model portfolios. So yes, 3% allocation, like you said before, isn't a lot, but like across trillions of dollars in assets, it's actually pretty meaningful. And then the other thing, and the other thing I would say is like, I said this already, but like if all the Bitcoin holders held up as well as the Bitcoin ETF holders did, things would not be nearly as bad as they are. So a lot of people were saying that the Bitcoin ETF coming online was going to be a lot of soft hands, and it's pretty much been the inverse, according to the data right now. And the other thing I'd say is like a good market of growth, whether it's an underlying asset or an ETF AUM, it's usually like, it's very rarely a straight line up and to the right. Like there's usually a thing where you go 2-3 steps forward and go 1-2 steps back. And that's showing healthy growth. Like the market's correcting itself, it's getting back in line and things like that. So I'm not that concerned about it right now.
Yeah, people that want like this parabolic growth and just think it's going to go from 100 to 200, like, come on. Like, even if we do that, we're coming back down just as hard.
Yep.
Because just remember, like, people want to make a profit. Like, not everybody's buying and holding this forever. Like, that's just the God honest truth. And they're going to come in, they're going to trade it. And part of trading, you got to take profit at some point, you know?
Real quick, I got to hop. I told Sean I'd stay on till 2. And it's
let's wrap it. I didn't even look at the time, actually.
Yeah, you're good. You guys keep going. But thanks so much, James.
Yeah, thanks. Great to meet you. I would say the other thing I would say real quick.
Yeah.
Is like all these calls for multi-million-dollar Bitcoin and like it happening in a short time period or all these different things. Like high likelihood if that were to happen, like I'm American and I don't want that to happen, because for that to happen, it means the dollar got absolutely obliterated or something really bad happened to like the current financial system. And I know some people kind of want that, but as somebody who lives in this world and, you know, I don't know, that's kind of scary. So I'm much more okay than, you know, the crypto natives who are like, if they don't get 5% a day, they're screaming. I'm okay with 5 to 10% a year in my, you know, my equity exposure and things like that. I'd like more if I held a bunch of Bitcoin, but you know, that's just not the way the world works.
So James, if people want to reach you, what's the best way to reach you?
I mean, if you have a Bloomberg terminal, just shoot me an instant Bloomberg, an IB, or an email. That would be the easiest way. But obviously I'm pretty active on Twitter, or X, I guess I should say. So if you don't have that, I'm on Twitter and I'm a little bit on LinkedIn, but really X or Twitter is where you can find me. I can't publish everything I'm doing on the terminal and for our clients, but I do share charts pretty frequently and what we're writing about. And yeah, that's where you can find me.
Yeah, we gotta get your sidekick Eric on with you. He keeps eluding us.
Yeah. Eric is way busier than I am. And he's also technically my boss and kind of got promoted up the chain. So he's got a lot more duties than just covering these markets than I do.
Oh, really?
Yeah, he's got his own hour-long TV show that he does every week. A lot of work goes into that. He's got his own podcast that he does that's an hour long every week. So I don't have to deal with any of that. Fortunately, I guess.
How long has he been there at Bloomberg?
Oh, he's been here since, I don't know, 2000.
All right.
20 something years. At the very least, it's 20 something years.
Nice. That's great. James, great to have you on. Thank you for always sharing your great perspectives on the market, where the market's going. We will definitely be bringing you back here in the near future, but thanks again.
Yeah, thanks for having me, Sean.
You bet. All right, that wraps it up for this week. We have an exciting guest coming next week as well. And then the following week, I'm actually going to be out on vacation. I'm going to the most miserable place on earth. I meant the happiest place on earth, Disney. So, but yeah, stay tuned. Thanks again, James, for joining us. And we'll catch you here tomorrow. Same time, same place. Thanks, everybody.
Thanks, Sean.
Take care.